You're listening to Blockchain 2025. The future is right now. Every week, we explore implications of the technology underpinning cryptocurrencies, blockchain.
Each episode is a standalone examination of one industry broken into 3 segments: a basic overview, blockchain's disruptive impact, and relevant crypto projects.
Blockchain 2025 is part of the Bitcoin.com podcast network. Learn about Bitcoin, create a wallet, and buy your first Satoshis all at Bitcoin.com.
Welcome back to part 2 of the Stablecoin episode. This is Matt.
And this is Blake.
Here we are. So if you didn't listen to part 1, it was amazing. You have to check it out. But we just go into what are stablecoins and the different types of stablecoins. And today's going to be more of an opinion piece. You know, are stablecoins necessary and good for the cryptocurrency ecosystem and or the money ecosystem as a whole? And just to explain that, Blake, you know, someone could have the stance that cryptocurrencies are not good and they prefer fiat, obviously not us. And they would say, well, because of that, stablecoins would be better. Other people could be pro cryptocurrency and say, well, if you're pro cryptocurrency, stablecoins might actually hurt the adoption of the quote unquote true cryptocurrencies like Bitcoin.
Yeah. And also as well, I think it's worth noting that, you know, people are seeing stablecoins as kind of this potential bridge. And it'd be cool to dissect that a little bit more and see, do we think it's actually a bridge or is it hindering progress? I wonder.
Yeah. And remember, cryptocurrencies are so early and the infrastructure is not there. So stablecoin or Bitcoin, whatever, it's still very hard to use a wallet. It's technically complex. So we're not there yet. And so if it takes another 5 years, will cryptocurrencies be more stable then? And then if the market cap of Bitcoin Cash, Ethereum, whatever, gets into the trillions of dollars, maybe its stability will be there and you won't need stablecoins at all.
For sure. And yeah, like you just mentioned then, like right now, it feels like stablecoins are just adding to the foundation of cryptocurrency. How that shapes it still is so early on. We don't know. All the companies are still kind of in the building stage right now, but it definitely feels like some foundational work is going on, right? And it's starting to really take shape.
For sure. And like we said, if the top cryptocurrency investment funds in Silicon Valley, Naval Ravikant and Pantera Capital and, you know, Coinbase are all investing in cryptocurrencies and there's, you know, multiple projects and hundreds of $1 millions coming in, there's got to be some pretty good reasons why they think a stablecoin is necessary, right? We can't just dismiss it. And it is worth noting, I mean, the first point I'd like to make is that none of the major cryptocurrency wallets have made any extra effort to support stablecoins.
Right. It's interesting even then when you look at the kind of companies that are pushing out stablecoins. So for the most part, they seem to be exchanges, right? There have been quite a few exchanges that have done that. So look at Coinbase recently, Gemini as well. So they seem to serve a specific purpose within the exchange. But then as stablecoins kind of become more prominent and maybe adopt different use cases, will those wallets actually start supporting them and how will that look?
Right. And are there any, because again, these are more centralized companies that control the supply usually of the stablecoin, except for maybe some of the algorithmic backed ones and maybe make or die, but I don't think that's true. I think they're able to add in which assets they want. You know, is there a legal and regulatory risk to allowing stablecoins on a wallet?
Yeah, I wonder. It's really interesting from a legal perspective. I'm sure that these huge companies that are rolling them out, I'm sure they've obviously done their due diligence about how stablecoins sit within the ecosystem. But I know, you know, recently when they had all this stuff about cryptocurrencies as securities, it's interesting seeing how it slots into that landscape as well, right? Yeah, surely there's basis for that, but I'm still trying to work it out myself.
For sure. And Japan recently, their government announced that stablecoins will be treated differently than cryptocurrencies, which is kind of interesting. But yeah, I think that, again, this goes back to the whole money laundering fallacy that cryptocurrencies are exclusively used for money laundering. But as you found with like Chainalysis, which is a company that explores blockchains, explores the Bitcoin and Ethereum blockchain and tracks it in order to see where money's going, I kind of feel that it's the other way where, you know, Coinbase launches a stablecoin, whether it's tracking purposes for them or for the government or whoever, they're like, wow, the US dollar is actually pretty anonymous. But if we support stablecoins on Coinbase, which is happening right now, and they're on a blockchain, we'll be able to track these stable versions of the US dollar better than the traditional version of the dollar itself.
Right. And it's interesting, from a kind of compliance perspective as well. there's this whole movement within cryptocurrencies where it's, we're decentralized, the whole, which a lot of our roots at Bitcoin.com are based in with anarcho-capitalism and libertarianism. But where it's interesting is that these big companies are so big now that they really have to work with governments and make sure that what they're doing is really compliant. So maybe stablecoins are a really neat way of doing that and making it way easier for them.
Yeah, man. And I think it would be really interesting too. Like, Brian Armstrong of Coinbase and whoever's on his board and these high level people, I'm sure they know a lot of things that we don't. And what type of things are they talking about? I mean, one thing that's worth noting, a competitor to Coinbase and a very big exchange called Bitfinexed owns, I think is the right word, Tether.
Right.
The Humans of Bitcoin podcast tells the stories of people whose lives have been impacted by cryptocurrency and blockchain technology. The guests of the show range from activists and refugees to artists, entrepreneurs, adult entertainment stars, and economists. This show is for everyone. No technical knowledge necessary. Subscribe on iTunes, Spotify, or wherever you get your podcasts. Part of the Bitcoin.com podcast network.
So listen, most stablecoins are in pre-launch. Out of the ones that are launched, there's really only one that matters at the moment, and that's Tether. Tether continues to dominate with approximately 98% of total stablecoin daily trading volume. It's Tether and the other 2%, right? And Tether is a controversial cryptocurrency. They don't have public audits. Some people argue that it was the main cause for the price spike last year, that Bitfinex used that to inflate the market. And there's actually an anonymous user, or formerly anonymous user, named Bitfinexed.
Right.
And Blake, tell us a little bit about Bitfinexed.
Yeah, so it's an interesting one. If you head over to Twitter, twitter.com/Bitfinexed, so it's ED at the end of Bitfinex. Yeah, so there's a user that's basically kind of outing Bitfinex and how they're using Tether and really going into the detail of why he thinks that it's a scam and why he thinks they're just literally printing Tether out of thin air and how they've kind of got away without being properly audited and all this interesting stuff just from a banking perspective too. The fact that, they've moved bank accounts several times and seem to get closed a lot, their accounts closed all the time. But yeah, it's getting pretty interesting over there. So Bitfinex has been anonymous for as long as I can remember. He posts probably 10 to 20 times a day. And I think now has like 40,000 followers on Twitter. But recently he got doxxed.
And explain what doxed is.
Yeah, so basically he was outed and his real identity was revealed. So yeah, he was outed online on Steemit in a post called How the FUD Mafia is Plaguing This Industry. Yeah, they kind of found out who this guy is, a guy called Spencer McDonald. But they found out who he was just by kind of linking up some of the key things, some phrases he was saying on Twitter versus a Reddit user. And then they sourced who the Reddit user was. But it just kind of shows you, like, this is big business. Like, going back to what you were saying, Matt, Tether's huge. And Bitfinex is huge as well. It's one of the biggest exchanges in the world. So this is the fact that something might be off there is really bad for them. And they need to do all the, whoever those people are. I don't know who it is who's doxed him. But there's a lot of interesting stuff happening around Tether right now.
For sure, yeah. We just don't use the word doxed in the US, Blake, just so you know.
Really? Okay.
Yeah. But he was outed. And it's kind of cool for this Bitfinex guy. So who is he? He's Spencer McDonald from Homestead, Florida, near Miami. And it's really cool that if you're just a random person and you can shed light on something that's a pretty serious issue in cryptocurrency. And the fact that Bitfinex was able to find him, but more than anything, put the effort and energy and money to find him, good for him, man. I think that's pretty awesome.
Right. But I think that's a key thing as well. Like, no one's exactly sure that it's Bitfinex who are behind outing him. So that's not being confirmed. And I don't think it will ever come to light. It could be the case. It might not.
Sure.
But what's interesting is that it's not slowing him down either. He's still on his personal crusade to show what he thinks Tether really is. So he's just trying to lay out the facts and still trying to, put himself out there. But just going back to what Tether is as well, like as a thing, I know when I first entered the space, it's really interesting from a beginner's perspective, going on an exchange and seeing this thing called USDT. And you have some Bitcoin and then you're like, okay, there's this thing called USDT, which looks like USD. So I guess I'm going to switch my Bitcoin to that so it's safe. And then you start kind of getting more deeper into the ecosystem and understand that, okay, maybe it's not as as safe as I thought it was. But I think that's a real problem for people new to the space. So this new wave of stable coins that are able to be audited and seem that they are doing everything they can to be transparent, I think it's a good thing.
Yeah, and I also wonder if Coinbase and some of the other exchanges and so forth was like, wow, Tether is a ticking time bomb. We need to create other less sketchy, for lack of a better word, or at least more transparent stablecoins now. So if this Tether thing blows up, whenever it does, and whether it's 6 months or 18 months, if there's more stablecoins being used, then it won't be such a catastrophe for the cryptocurrency ecosystem. Because I know they have a 98% volume share now, but maybe it's down to like 30 or 40%, and it wouldn't be, an atomic bomb, with just kind of like a grenade.
Exactly. And I guess like what you said, Tether is the only example we have right now of what a stable coin looks like at scale within like cryptocurrency, which still hasn't blown up when compared to other markets, but it's still got pretty big. So it's interesting seeing that there's a demand there. And obviously these companies, like you said, have maybe thought, okay, wait a second, if we can do something that's better and more transparent, maybe we're onto something here. But then it also comes back, Matt, this argument that we've actually mentioned before about how centralized are stablecoins, and are they really cryptocurrency? What do you think?
That's a tough one. I mean, I would say short answer, it depends. And not all of them are cryptocurrencies. Maybe some of them, like the MakerDAO and the DAI or DigixDAO, with their, each token being a redeemable in Singapore for a token of gold. I think you might call them cryptocurrencies. But again, then I think like, well, what's going to happen to the vault? Could someone rob the vault? So there is a counterparty risk there. And I guess it depends, and some are more cryptocurrency-like than others. It's not uniform. So yeah, man, and this is a quote from Ryan Selks, the 2-bit idiot and founder of Masari, former editor-in-chief of CoinDesk. Quote, "Stable coins will work until they don't. Sure, the Basis and MakerDAO teams seem strong. Basis raised like $130 million. But these things will always break under not so black swan market conditions. And like the fiat currencies they aim to replace, once they break, they'll be broken for good." So I think that's quite interesting. And we've seen that a little bit. I mean, some of the stablecoins on the market, I think, have gone from, $1 all the way down to 80 cents, and Tether even hit 90 cents, right? But that stablecoins are working until they don't. Bitcoin Cash, Ethereum, Litecoin, they can fluctuate, and that's okay.
Yeah.
But if a stablecoin goes down enough and people lose confidence in it, it goes to zero instantly.
Right. And that's the thing. Okay, so if you have a stablecoin and it's going up, you're like, wow, cool. Like, I have an asset which, okay, is not doing what I thought it was going to do, but I've just made a ton of money. But on the flip side of that, like you said, when a stable coin loses value and kind of slowly plummets and is maybe 20, 30% below the peg, then, people aren't going to be happy. And exactly like Ryan Selk said it, it works until it doesn't work, right? Then it just doesn't work anymore and everyone's at a loss.
And that's the hidden big risk. And a lot of these things like, the algorithm. And it's worth mentioning, man, you have like the MakerDAO, which is really interesting to me, and the Basis. We're talking about top minds and top teams and people investing in them. But there's lots of stablecoins, and maybe that's good, but they all kind of are on the defensive. And Basis's white paper, they talk about why all the other top stablecoins won't work, and vice versa.
Right.
So someone's got to be wrong, and maybe they're all wrong. Maybe none of them are going to work. I don't know. Again, we're still early, so there could be a clear answer or a clear winner down the line.
Right.
Or there could be multiple winners. So I think that's worth considering.
And I think also it kind of goes back to the blockchain report that we mentioned as well. They even state in there that, that there are 45 projects, like we said, that are all fighting right now. But maybe we haven't actually found the best stable coin yet. It still seems so early that there's probably going to be, in the same way that with cryptocurrencies, for us at Bitcoin.com, we think that Bitcoin Cash is the best way to have fiat, a cryptocurrency that works like fiat right now. But you never know how things are going to look in 20, 30 years, right? So it's interesting to see how this space develops.
Yeah, and I think we'll come back to it. I mean, the next thing to think about are stablecoins being digital IOUs to be used instead of real world money. But again, the problem here is if there's a central control, it's an IOU, just like the dollar is kind of US dollar is an IOU. But if it's just an IOU and there's a centralized company that controls it and releases it and burns these tokens, then what do you really own?
Right, exactly. Yeah, probably not too much. That's the truth of it. I don't know. And it also comes back to this whole, like we said earlier, is are stablecoins really cryptocurrencies? You know, the root of what a cryptocurrency is, I think it needs to be, in my opinion, it needs to be pushing to be decentralized and peer-to-peer. And as a stablecoin, does it really do that? So I think, in my opinion, these stablecoins that seem to be shooting to be, a medium of exchange in particular, I don't know if they'll ever be able to fully do that in the way a cryptocurrency is pushing to do it and sitting within those ideals as well.
For sure. And as the market cap gets bigger of all cryptocurrencies and you have some $1 trillion coins, there's going to be less volatility and it could make stablecoin obsolete. But maybe stablecoins could serve as a bridge, just like cryptocurrency debit cards are pretty cool. BitPay, BitNovo, and some other words.
Right.
Maybe they're just in centralized exchanges like Coinbase. And a lot of large exchanges say, yeah, we think decentralized exchanges are the future. And these centralized versions with the middlemen are just a bridge for adoption. Maybe it just serves as a bridge for adoption. The final thing I like to say is an algorithm in a white paper. How can you account for all the scenarios when it's an algorithmic backed coin? Algorithm works until it doesn't. And same thing if it's backed by the US dollar or the euro. The US dollar and euro is print money, but there might be hyper Bitcoinization, which is where just cryptocurrencies win out and money moves away from fiat, maybe not entirely, but into cryptocurrencies. And these fiat solutions are seen as flawed and their value isn't stable anymore. So even if you are able to keep your digital cryptocurrency pegged to the dollar, which is hard enough to do, if the dollar itself loses value, then what do you have?
Exactly. I think as well that when you're really thinking about stablecoins as being, a risk and potentially unstable. I mean, what's certain in this space? Nothing's certain at all, right? And I think as long as they've been thought out for a specific use case, like for example, with Coinbase, they seem to be talking about in all their marketing and everything they're putting out about the new stablecoin, they always seem to be talking about, it's a quick way to exchange and a quick way to trade and hold a crypto asset. So I think if they're focusing on a specific use case, it makes sense. But yeah, it's when they kind of get out of that initial phase, what does it become? That's when it's going to get really, really interesting.
For sure. I think we can agree that there's some trouble in aspects and centralizing aspects and just trusting the algorithm or the counterparty risk, meaning holding the dollars or holding gold in storage. What happens if something happens to that money they're holding, or the bank account's audited, like with Tether? And there may not, this must be like the first round and maybe not the ultimate stablecoin may not exist yet. But aside from that, looking at it as a bridge, just like any type of technology, and this is a new technology, you can invent something, but you cannot control the way it's used. And maybe it will be used a lot different than the intent of the use cases of the people that create them.
I agree. Let's see how it pans out. And I think for the general user, a stablecoin, it might be an easy way to get into cryptocurrencies. I don't know how that argument holds going forward, but we'll see. We'll see how that pans out during the next bull run, if and when that happens.
Yeah, I think a lot of people listening are like, please happen soon for those that are holding cryptocurrency and still would like to cash some of that into fiat. But Blake, man, this was a fun episode. And yeah, agree, disagree. I'm sure there's plenty of other angles to see this topic. Email us at podcast@Bitcoin.com. As always, subscribe and share, and we'll see you next week.
See you next week, guys.
Thanks for listening to the Bitcoin.com podcast network. To learn more about our shows, visit Bitcoin.com/podcast. Bitcoin.com podcast network.